Good morning, traders. It is Thursday, March the 28th. Taking a look at the charts, we're going to start off here with the monthly chart, just to give everyone a big perspective of where we are, because we are posting content talking about how we are bullish potentially long term and how we are very bearish potentially. It really depends on which way the market goes, and you just have to be aware that it could go either way. Obviously, no one knows which way the market's going to go. All we can do is follow it as close as possible. So this is the monthly chart of the SP 500. If we go back to the last two bear market or bull market tops, potentially a third bull market top, we need to be aware that the markets are setting up very similar to this type of price action. We've seen it happen twice in the, well, actually, we've seen it happen three times in the past. Each time we've seen very similar setups to what we are seeing right now. Obviously, as price gets more pricey, we see larger price swings, but in general, this is all the same type of topping formation, and the big question is which way is it going to break out? These are giant consolidation periods. If they roll over and go down, then they are major topping formations. If they continue to go up, they are just a major consolidation, a continuation pattern, and we see it go higher. So this is where we are. We're stuck in this big range. I know a lot of you want to know if we're bearish or bullish, and the answer is we're neither. We are stuck in a major range, and we really are stuck near this upper end of this resistance as well. So we've got a lot of price action to kind of work through before we know which way this market is going to go. I do feel as though this break to the downside, this bounce up is more of a bearish tone, but the market doesn't mean the market's going to roll over and sell off. We really need to see which way it starts to break going forward. And of course, it's a huge range that it needs to work through before that happens. It looked like the market was topping in 2015. We are breaking down 2 months back to back below these significant pivot lows over here, which look like a very much like a topping formation when these bars were red all the way down. But Trump got in, first year of a presidential cycle, very strong in the markets. He put a lot of things in place to help small businesses. Everything took off. He saved the day, and now we're back to another one of these phases where we need to see what's going to happen with the markets in this giant consolidation or topping phase. So let's just jump into the daily chart real quick. We've got a lot of mixed signals across the board with different indexes, some of them bullish, some of them bearish. This is the SP 500. We've had a pop up, and we're kind of hanging on to this 20-day. Has a bit of a bearish feeling here looking forward. Overall, it's still holding on to an uptrend. The big question is, are we having something like this where we had a reversal type bar and then we had a little pop and fizzle out and then it broke out and took off? We've got a similar price action like that again. We've got another little pop and it's holding its ground. The question is, are we going to break and flush down? Now, interestingly enough, yesterday we saw some really unusual options activity in the UVXY and the VXXB ETFs. These are VIX inverse. Let me just pull up the UVXY. These are not inverse. These are just regular VIX ETFs, and there was a lot of big money moving in to the VIX for Friday for this week's expiry, meaning there's big money betting that there's going to be a spike in the VIX between now and the close on Friday. So knowing that we might see the market, let me just go back to the SP 500 here. We could see the market flush down and shake out with a little A, B, C correction. If it can hold these lows, that would be a good sign for the markets to continue to go higher. Spike in the VIX usually means we're washing out, putting in a low, and then the market could have another bounce and continue to go potentially to another nominal new high going forward. So there's a lot of mixed signals in the market, and I know everyone wants a clear answer. Which way is it going? At this point, the trend is still up on the majors. It is at support. It's somewhat oversold. We could see it have a little leg down here. Again, if we just do a Fibonacci extension, you can get a nice simple target. You go from the high down to this low, up to the recent high, carry it forward. This would be the price action that the market could sell off to. We came down, we've bounced up, and the continuation move, 100% move, would be the 2760 area on the SP 500, which is well above this pivot low, and that would be an ABC correction. And then we could see the market work itself up and bounce and break to another nominal new high. We always see these highs broken by a little bit, and then we see a pullback, and then once it's broken, it rallies up and then pulls back, and then it rallies up, breaks the high, pulls back, and we could very much so see this continue to go. Now, overall, these bounces are getting bigger. It means there's more volatility in the market. Price is starting to get a little more unstable. So we just have to let the markets work itself out. We did get into a long position this week with TSG, with some unusual options activity, betting on much higher prices in the near future, because the underlying trend here does continue to be to the upside. So we're going to let the markets work itself out. The next couple weeks could still be really unknown and really chattery in terms of which way the markets are going. So we gotta play it safe and let the markets do its thing until we have a clearer direction. Looking over at precious metals, here are the metals markets. Kind of squeeze them in here. You can see a little bit. This is gold over here. You can just see the end of it. Down again today, breaking the support trend line. More or less, if it breaks 1307 to the downside, it should unleash a wave of selling, bringing us down to the 1260, 1255 area. It touched it yesterday, bounced, futures gapped higher, and then they sold back down, testing this level again today. If you look at silver, it's already broken this little support trend line. It's starting a free fall mode. Platinum up near resistance, a couple topping candles, tweezers, indicating each time it goes up, big sellers step in, looking bearish, but still holding a support trend line across here. And today it's this threatening a tighter support trend line across here as well. We look at copper, bearish breakdown, bear flag, and palladium is in full out sell-off mode, crashing down to the next level of support, this previous spike high over here, this little consolidation as it tried to break out. So there is selling going on in the precious metals. Actually, let's just quickly pull up and see what the currencies are doing. US dollar having a nice pop today. We have been expecting the dollar to continue to move up. If we look at the dollar here, let's go to the weekly chart. We're expecting the dollar to potentially rally up to this 100 mark, this 100 level, still fairly high from where we are. It's a key level where price popped above, held above it, and then when it broke below it, it gave way. It was a significant top twice over here where price tagged it and then reversed. It's done it several times. So the market, I feel as though, is going to be gunning for that 100 mark. And then the dollar could potentially roll over. So this is a weekly chart. So we are still looking at potentially several weeks of the dollar potentially in rally mode to the upside, which puts downward pressure on commodities like gold, silver, and miners. Let's take a look at TSG. This is the position we got in a couple days ago. Overall, it's been working itself down. There's been some big options plays going in, moving into this market, into this stock, anticipating sharply higher prices. This is how we spotted NIO, which jumped about 22% for us. Roku up about 18%. This is the same type of price action. Money's moving in volume-wise and also in options with much more leverage. And so we're looking for a potential pop and extension move up into this 21 area. Obviously, it's not going to happen right away. A lot of times you don't see these signals until it's got some upward momentum in them. It's got lots of buying, and it is testing some resistance. We got this spike high over here. We got these previous pivot highs here, this other high here. But overall, the momentum is shifting, going from a downtrend to flattening to starting to curve up. And price may pull back and consolidate a little bit, but overall, money is flowing into this smart money, and it's getting positioned for a pop in the next month. So that's what we're looking for here. Taking a look over at, let's pull up natural gas, up 0.75%. Natural gas working itself down. It did flush down through this 270, which is a support zone. It's this previous kind of little W formation pivot high where the market came down, bounced, came back down again for a W or double bottom formation, and then rallied up. It is finding a little bit of support here. Ideally, I'd like to see it actually flush down a little deeper, but overall, the bias is to the upside with potential of the markets pushing up to this 3 mark, potentially even the 315. We may get into this. Ideally, we're at the 5-day moving average right now. The momentum is to the downside. If it gets rejected here and sells down, could be a great opportunity to get in. Yesterday, you could argue might be a little bit of a bottoming candle. Maybe it's going to reverse and start to go higher at this point, but it's still struggling under the 5-day. And usually the 5-day is a really critical level. If you're under the 5-day, you're in a strong downtrend. Once you start breaking it, you're starting to shift, and then you stay above it for a while, and then eventually you'll have a crack below it, and that trend is over. So right now we are under that. It could continue down for a little while. If it does start to break above it, maybe it is finally reversing with the potential upside of 315. 3 would be around the first target area. So we'll keep our eyes peeled for a potential setup to maybe get long there. Crude oil down 1.7% this morning, pulling back again. In the grand scheme of things, it's trading right in the middle of its range. It's moving down to the 20-day. More or less, when we see it get to the 20-day, it seems to find support. Got to it again, found support. Today it's selling off down to that 20-day. Overall, it's also these pivot lows. If you look at this market here, you've just draw a line across these levels here. There's been lots of bars trading at this blue line, these candle lows, and it's back down to this level. So this is a short-term support level. The volume this morning is pretty big and pre-market bearish. We're seeing some heavy selling this morning in crude, but overall, it's got key support down here around the 57, and we are expecting it to continue to try and work itself around this 62, up to the 62 level, if it can continue to find some more traction here. To quickly touch on Tech S, this is the XLK, which is the tech sector. More or less, Tech S mimics this. Overall, it had that reversal day. It's doing the same as the SP 500 and the NASDAQ, more or less. It is consolidating, trading sideways. It's still above the 20-day, so it is still in an uptrend. It has what looks to be a reversal pattern. We could see a flush down low today or tomorrow with a VIX spike. Not a huge VIX spike, but a pop in the VIX and fear. But overall, again, it is still in an uptrend. And tomorrow will be a pretty significant, I think, signal in which way the markets are going. We'll see if we do get some panic selling and if we end up getting a bounce and a reversal next week to the upside. So overall bullish on the equities market still, but in the next 2 days, maybe we get a little bit more weakness. If we look at the dust, or let's go to GDX, which is the gold miners ETF. Overall, it came out testing these recent highs and really going beyond our threshold. It's had a 3-wave correction to the upside, and now it's trying to reverse down. It is trading lower this morning than 2280, so it looks like it's starting to reverse. As for the dust, let's take a look at dust. Dust will be popping up this morning. Maybe this will be a nice double bottom here in dust. All the miners looking very bearish. Sorry, all the metals are looking very bearish. So we could very much so see this being a major double bottom in the gold miners. And when it breaks this neckline here, this could be a very significant breakout zone for dust to potentially pop out of. But again, that's a huge move. We need to see a big sell-off in the metals, and the miners would follow suit. Obviously, this here would be the first target, this previous high 19. Second target, if it breaks that, then we're going up to a full measured move to the upside, which is also this previous pivot high in the market. So there is potential here for dust. Again, the Tech S and the dust kind of moved more against our position than we wanted. Trying to get into the more leveraged plays, it backfired on us. The overall gold is still looking very bearish, and the miners are still looking very bearish. It's just they became more of a safe haven. Lots of money piled into miners, driving dust down to a double bottom versus this being the bottom over here and then continuing to see it head higher at that point. Anyways, that's it for this morning. Sorry for the longer video, but just want to go over stuff in a little bit more detail. Anyways, take care. Bye-bye.